I'll tell you what, I just want to get back before we get Deven's view on both these two stocks. Sudarshan, my colleague, is putting out some flashes on the ticker. And what S&P is mentioning is the effect of the US tariffs on the Indian economy will be manageable. And India is relatively less reliant on trade, and about 60% of its economic growth stems from domestic consumption. So they're stating the obvious, but I think that point with regard to India's story is strong, and we'll be able to combat these tariff issues that are coming out of the United States. That's giving some confidence as well. Well, we're going to be joined by an economist very, very soon, but let's get Deven's take first on these gold finance companies. Deven, I've been observing whenever there is this kind of regulatory overhang on these companies, these gold finance companies, they bounce back even more swiftly. I recall there was an issue earlier this year when you had the same stock, Muthoot, had gone down to 2,000 rupees, and from there it's given you 30%. Valuations are not cheap, but what do you like between both these two, Muthoot or Manappuram?
So, good afternoon, Nigel. Well, I think in case of Muthoot, I think the opportunity is different versus I think what you have it in Manappuram. The one is basically having the larger footprint in form of I think diversified portfolio. The other one is pure gold focused company. In my viewpoint, I think a pure gold focused company with a long tenure gold loans is something which basically I think makes more sense, though I think the NPA ratio is not something which I can easily comprehend. In a way, one wants to look at I think this particular business, given the strength of the gold price at this point of time, and I think given the kind of demand that one would have during the festive season, probably the tailwind is in favor of the gold finance business, and that's where probably I think market is also remaining a little bit more steady onto this particular subject. As far as we are concerned, we prefer to go with a diversified consumer finance companies, NBFC companies, the larger ones. We don't like to stay focused onto the asset class like gold pure play. I think as far as I think the investment is concerned. So the likes of Bajaj Finance would remain relatively more better choice. And if one was to go with a dedicated one, then housing finance business also I think remains a relatively more sure bet vis-a-vis the gold as far as I think the safety or downside is concerned.
No, yeah, absolutely. We'll just look at the market for a bit, 10 points, 11 points, and we'll just wait by. Devin, good afternoon. I'll just wait by till I'm told we can go across to Mr. Soumya Ghosh, who's with us, who's joining us in just a bit from now. Market breadth, by the way, is pretty poor, pretty terrible. 1,700 stocks are lower and about 1,100 stocks are higher. So this is actually pretty negative. It was not this in the morning when we actually looked at things. Things were looking much, much better. HPL Electric started lower, about 6-7%. It was down 10% by about 10:30 in the morning, and it's down 16%. So that's a pretty large cut coming through, and you've got lots of these smaller, 5-6% kind of accidents, and even larger ones, right? I think Surya Roshni is another one which is down sharply. I think we have Kanika Pasricha, Chief Economic Advisor at Union Bank, now joining us, the first voice, and we'll get you more. Ma'am, good to have you with us here. Thanks for joining us. The upgrade from S&P, what do you make of it? And immediately, in practical terms, what does this mean in terms of impact?
So, Prashant, thanks for having me. See, 3 points. First, it's a positive move, and actually it's a surprise move as well. Because recently, when we were speaking to S&P, it was not expected that the move will come in. But I would just say it is very long overdue given our own macro stability dynamics. We are still the fastest growing economy in the world. And the way we have seen improvement in inflation, fiscal, current account dynamics. So all this is playing out. S&P in its report is also mentioning, as you're also flashing it, that they have given due credence to this focus on capex by the government, overall macro stability, and that's a acknowledgement overdue, and we've finally received it. Last but not the least, is typically from market perspective. Recently, the bond market was having a lot of concerns about some fiscal slippage or need for fiscal stimulus or some sort of fiscal related issues in the coming year. But this is likely to give some relief to bond markets. We've already seen yields drop by 4 to 5 basis points. So some positive news on the cost of borrowing, cost of capital coming down as well. Thanks.
Hi, Kanika. Good to see you. Has this come as a surprise, and do you expect other rating agencies also to follow suit? We'll be waiting back to hear from Moody's probably. Your take?
So Moody's typically has a very transparent framework which they work with and display in their reports as well, where they are also stuck on other issues like lower per capita income and maybe slightly higher debt to GDP compared to our EM peers. So let's see if Moody's follows through. It will be a positive acknowledgement, but overall it looks like yes. It was a surprise given we are not heard from them. We are already, as I said, it's long overdue. Given for the past 2 to 3 years, typically India has seen a dramatic turnaround since COVID in current account dynamics and of course even fiscal and inflation numbers. Thanks.
Kanika, just hold the line. We have Dr. Soumya Ghosh also joining us. He's Group Chief Economic Advisor at State Bank of India. He's a part-time member of the 16th Finance Commission as well. So good to have you with us here. Your first reaction to the upgrade which has come through, sir, and what do you imagine is the impact in practical terms, sir?
No, I think that's a positive development for the economy as a whole, and you can already see that's been reflected in the cost of borrowing, the GSEC yields, the rupee. And the most important point is that it reaffirms India's commitment to the reforms which we are currently underdoing. And given the fact that I think this last outlook, I think it is coming more than a decade. The S&P outlook, upgrading India is coming more than a decade. I think it's a very positive development. And one of the interesting points which the S&P has mentioned in the press release, which I can gather from the press release which we have been putting out, is that it has also talked about the monetary and the fiscal policy coordination. So I think since the pandemic, this policy coordination has been demonstrated in full gusto, and my sense that it's a positive development of the economy amidst all the uncertainty which we have been facing in the last couple of months.
And for the upgrade to come at a moment, particularly like we find ourselves in now, right, which has been a little bit of the US-India thing which is going on, and whether there have been some talk whether this is going to.
I think that this upgrade actually could I don't know. This is possibly could point up to some thaw also in the India-US trade deal, which could actually which may materialize. It seems that there is a possibility of it materializing maybe in the next 1 or 2 months. So the sense is that there has been policy continuity, there has been fiscal coordination, inflation has been under control, robust and governed fiscal deficit. If you remember, the center has brought it down to 4.4% from 9.2% in a span of 4 years. And the state's consolidated fiscal deficit is also around 3% because that's a rule because they can't borrow more than 3% of GDP. And overall consolidated fiscal deficit has also been steadily declining. My sense is that if the things continue like this, I think it will be good for the economy and it will be good for the debt market and the bond market as well.
I think Moody's, Dr. Ghosh, has also got us at the lowest investment grade, like S&P was before this upgrade. Would you expect others, Fitch, for example, is at a stable outlook and a different nomenclature in terms of the ratings. Would you expect others to follow? Typically, should we expect when one large rating agency moves, others sort of look at their own assessments?
Yeah, I think others would follow, but I am glad that S&P, I think, was the one the rating agency which was actually has pushed the rating upgrade to has done this rating upgrade after more than a decade. So from that point of view, I think it's a very positive development. And even if other agencies follow, I think that will be good for all of us. But in terms of the overall rating, I think S&P upgrading India is a very big news for Indian economy as such.
I was saying earlier, Dr. Ghosh, that we've had rate cuts, but bond yields here have moved higher. There have been some concern at the margin whether, government borrowing is going to be, is there going to be any issue at the margin with regards to financing that? I think in terms of government borrowing, bond yields, etc., this perhaps helps in a sustainable way, this upgrade and more if they follow?
Yeah, I think that's a very interesting question, Prashant. My point is that I think ultimately a rating agency has to convince the Indian markets that Indian public finance is actually in quite a good shape. And I don't see any reason why the debt markets, the bond yields have actually reacted so unfavorably after the monetary policy announcement. Maybe it was a market reaction, or maybe it was an irrational exuberance, or whatever you can call it. But my sense is that after this S&P call, and with an international rating agency ascribing that India's fiscal position and monetary position continues to be sound and favorable, the debt market already has taken a cue from that development and the yields are down. So that is, I think, one of the another positive developments for the economy as such. Because if the cost of borrowing declines in the international market also, that will be also a positive for the market.
Okay, all right. Thanks a lot for joining in, Mr. Ghosh, as well as Kanika, and giving us your take. So, initially we didn't see a big reaction, but now as you look at the intraday chart on the rupee, you'll see the rupee has pulled back a little bit. The yields have softened by around 4 to around 5 basis points. And the Indian stock market itself has suddenly come back to life. We're up close to around 35 to around 40 points after being mildly negative. So the rupee pulls back. The yields as well have cooled off a little bit, and the Indian market spiked to the high point, towards the high point of the day as we speak. And we have an expiry that's playing out. So getting this sort of a news point on weekly expiry could sometimes lead to an outsized reaction. So let's see whether or not those call writers, they suddenly get stumped on the wrong side, because they would be bracing for not a very, very big move. And suddenly you have the Nifty that's moving up. I think around the 24,675 to around 24,700 going by the options data. That's where the bears are looking to defend for today. Let's go back to Deven Chokshi. Deven, good news definitely that's coming in there. S&P going ahead and detailing that India is growing well. The consumption story is something that we should be focusing on domestically. And we'll be able to, bear up or withstand any kind of impact of this tariffs. So heartening to hear those words. Your take, any stocks that you've seen today that you would like to talk to us about or recommend it? Because it's the final day of earnings. It hasn't been so bad, actually. Expecting a weakish performance in the first quarter. In the last few days, you've got some earnings surprises, actually. One stock is Asian Paints. It's now moved to the high point of the day. That was a pleasant surprise as well. What's your take?
Yeah, Nigel, I think it's a very positive news going forward. And at the same time, I think the commentary coming in from RBI, I think on the lowest lies inflation. I think they are saying that I think India will now probably focus more on the growth vis-a-vis the inflation. Now, this is extremely positive commentary. That means that I think the regulator is trying to pitch in and I think put across, I think, the growth-oriented policies for the banks. So which promises that I think going forward, you're likely to see the activity increases, I think, as far as the economy and the companies are concerned therein. Overall, I think the first quarter result season is over. And my take is that I think based on various commentaries that we have heard from different companies, my take is that in these subsequent quarters, we are seeing a robust demand scenario emerging. Consumer demand from rural space, I think, is actually, growing better. At the same time, I think cost controls are, quite some in the entire universe in different companies, of course, which also promises better profitability along with the growth in the current financial year. So I think some of the immediate ones who could possibly be the beneficiary immediately, autos, I think in particular, would remain relatively more short bet as I see it. The likes of Maruti's, likes of Tata Motors, and for that matter, Mahindra & Mahindra, they remain, I think, relatively more focused stocks as far as the investment outlook is concerned from them. I also believe that I think some of the real estate companies could possibly see relatively larger amount of uptake as far as I think the constructed premises are concerned in subsequent quarters. So we remain distinctly bullish about the discretionary spending in the economy and probably believe that I think lower cost regime is definitely helping the economy more at this point of time.
Got it. Okay, all right, Deven, it's good to have you on the show as always. Thanks a lot for joining in. It's been a good afternoon, actually, with this kind of pleasant news flow that's come in from the S&P. Wishing you a good weekend ahead, Deven. We chat up in the next week itself. Well, slip into a short break. Continue our focus on markets. We'll have Tushar Pradhan as well, who will be joining in.